Welcome to the TrustBridge Capital Market Observations Call for June 2024. I'm your host, Eric Jefferson. A few quick words from our legal team. With that, we can go ahead, dive right in. A lot to recap. I saw some volatility return to markets. The S&P up just shy of 5% in the month of May. That had offset some prior losses in April that were similar, bringing the year-to-date return just north of 11% on a total return basis. Meanwhile, bonds, historically the conservative aspect of a portfolio, still under a little pressure, registering a modestly negative return year to date. Now, we think about some of the drivers here. We talk time and time again, the market is not the economy, yet the two are obviously inextricably linked. We have seen some softening in that economic data. That in turn, I think, has led to some of the volatility that we've seen play out over the last 2 months. When you think about some of the headline indicators, first and foremost, GDP, gross domestic product, that is a measure of the size of the US economy. That registered a 1.3% seasonally adjusted growth rate in the first quarter. That fell short of expectations of 2.5%. But again, still worth emphasizing that represents positive growth. Our economy did expand, did grow, albeit at a slower rate than it had, as well a slower rate relative to those long-term expectations. We did see positive jobs growth and wage growth as well. Again, both of those, though, grew less than expectations, which in many ways was sort of that Goldilocks scenario. Growth is still good. Labor market is still good. Is cooling, though. That in turn helps put some downward pressures on inflation that ultimately then controls interest rates. We think about inflation, same thing, had expectations come in line for the prior month. That's something seen a lot of progress over the last 6 to 12 months. Granted, that progress has stalled a little bit as of late. Something that we've talked about, that last mile, that last leg, if you will, getting prices back down to those long-term averages tends to be the most difficult. That is something, though, we are certainly encouraged that we will get there in the months ahead. One question we received this week was with respect to some of the different components of inflation, energy in particular. We have crude oil trading now in the high 70s. That was off its peak 12 months prior, but still well north of where it was pre-pandemic. Question we received from a number of folks, is there some, I'll say, manipulation from a lot of the producing organizations, keeping supply and demand artificially out of balance to impact prices? That's certainly a separate conversation. But one thing I want to highlight when we think about overall prices, yes, energy certainly ties into that overall CPI calculation. That is a component of what goes into creating that index. But as we think about where oil is trading today relative to where it was 3, 4, 5 years ago, in relation to overall price and wage growth, interestingly enough, haven't seen oil exponentially higher. Again, if we think to May 2019, that was the last time that crude had traded in a similar range, had rose by 23% relative to where we were. We estimate, though, CPI roughly similar. And so the point of all of this to suggest, in a very real sense, where oil is trading today at let's call it high 70s, low 80s, that is the equivalent of 63 a barrel in prior years. And so we think about what's really driving inflation. Arguably, at this point, food prices do remain elevated. We've certainly seen shelter costs. We think about the price of new homes. A lot of that is a function of not as many people moving. Haven't really seen some of that price discovery. We think about those two key components specifically on the real estate front. I think we have the most opportunity there when we do look at some of the various indices tied to that sector. Have seen much more progress there that hasn't been reflected in the actual calculations for CPI. That's something that does give us some encouragement as we think about continuing to make progress back towards that longer term goal of 2%. That's all for this month. As always, happy to answer any questions in more detail. If you don't connect, hope to talk to you soon. Take care.